Dollar CAD long-term technical analysis for the week of August 15th. FXEmpire.com. The dollar Canadian pair found itself rising during the week but failed at the parity level. As you can see, we formed a little bit of a shooting star, not quite technically a shooting star because it didn't close underneath, but it does bring up an obvious situation and an obvious bias to this chart. We are in a downtrend. We have been for a couple of years. There's really no denying that. And parity, of course, is a major psychological level. This pair will be determined by what goes on in the oil markets, which are looking like they're trying to find a bottom. If that's the case, and they do, the Canadian dollar will strengthen, which will drive this pair down, which will fit nicely with the trend and with our resistance area. That's kind of what we're hoping for. The daily chart's a little bit messy at the moment, but truthfully, the longer term outlook for this pair is probably to the negative. Any hint of QE3 from the Fed this week could also push this pair down. So odds are we are going down, but the trigger really isn't until you get to the bottom of the weekly bar. If we make a new low at that point, or lower than last week's low, then that is a confirmation, and the pair should go searching for 94.50 before it's all said and done. A break on top of the weekly bar, then we have to start to think, are we getting a little bit of a trend change? Although I would say that's probably a 10 to 15% likelihood, as more than likely this pair does go down.